We outperformed the market in March, and we lost over $200,000. The market has been in a free fall, and I know it can be hard to stomach from day to day, but this is a good thing for us share accumulators. These are the perfect market conditions for building long-term wealth if we stay true to our system. We have a lot to get into this video, and of course it will include the portfolios, value by holding, and ooh baby, those have dropped a little bit, all new transactions in March, the dividends received, and we legitimately have an all-timer and a couple revisions to make from the prior months, a HODL factory update, that one's been interesting, and any future strategy changes moving forward. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Please use the brand new hit stick on that like button. Subscribe if you haven't already, and drop me a comment down below with anything that comes to mind. This video is brought to you by my Seeking Alpha Premium and Snowball Analytics links below. Check them out if you want to try either one for free. And I'll leave them in the pinned comment. I'm gonna start doing that from now on so I can make this section shorter if you want to try them out for free. And I gotta say real quick, Snowball Analytics has quickly become my favorite portfolio tracker, and I'm gonna show you some of the cool reasons why later on in this video. You know what time it is. Let's grow. Everything is fine. I lost over $68,000 in a single day in back-to-back days. But seriously, everything is going to be okay. We build our investing system to weather any storm, but the trick is sticking to that system when times get tough. It's easy to say all of the right things as the market is rising, but many people have lost their resolve over the past few weeks. And I find this a bit scary because I'm recording this video on 4/6 on Sunday. I always do these portfolio updates when the market's closed, so all the numbers line up from the spreadsheets to the accounts. And it hasn't been that bad yet. Things could get a lot worse. Panic selling when fear is rising will not help you build stable, long-term wealth. It's more important than ever during these times, but really during all times, to stick to the target allocations. I like to track my investments daily. I'll read Seeking Alpha Premium articles and keep up with the general sentiment of the market to continue learning and growing, and frankly, a lot of times just for entertainment as well. But it is perfectly fine to disengage with all market news if it is upsetting you and ruining your day. You won't miss out on anything that moves the needle. Go enjoy your time by doing the things that make you happy. This market will turn around eventually, and your investments will be there waiting for you when it does. Think about it this way. Your portfolio value is calculated by taking the price of your holding multiplied by the numbers of shares that you have. Pretty basic stuff. And we have full control over the number of shares that we hold. The number increases every time we dollar cost average more money into the holding. The shares will never decrease unless we choose to sell. This half of the equation always goes up when we ignore our emotions and stick to the system. The price side of things is all over the map, but the market continues to hit new all-time highs. And we don't know when it will happen. I wish I did, because then I'd be really rich. But we have multiple centuries of proof that businesses continue to grow over the long run. Please don't make any emotional mistakes in the coming months that can derail decades of progress. Buying in the most troubled times is when fortunes are made. Let's dive into something that is very troubling. Portfolio overview. The spreadsheets you'll see in this video are available out there for free if you're interested in saving a copy and making it your own. A link to the free spreadsheets in Excel or Google Sheets in the description below. We'll get right into all my accounts, and then we'll bring everything together by hopping over to my portfolio tracking spreadsheet. We'll start out here on my wife's Roth IRA account. This is the one I haven't shown yet because I've just been saying, trust me, bro, it's there. And I did the power of attorney form to combine our accounts, got it notarized, sent it in, and missed a single signature. So I have to start all over. So instead of using the same sorry excuses, I just wanted to show it does exist. JEPQ, 247 shares now. We've recently added to that. I'll get more into that later. 7 shares of SCHD. So here it is. Here's the value. Clearly started at a bad time, ouch. But you can do the math if you want to audit me. This will be included in Seeking Alpha, but not in my E-Trade. Okay, now I'm out to my E-Trade account. This is the one I show each and every month, and you can see I have all brokerage and bank accounts selected right now. Within this is my traditional, Roth, and taxable brokerage. And I go into detail on that, I think in last month or 2 months ago, if you want to scroll back and look at what specifically is in each one. But usually I just show at the high level before we jump to Seeking Alpha. With SCHD, we've added some shares. We have 14,943 out here for me. You add her 7, and of course my OCD sees the nice round 50. We'll see that in Seeking Alpha. And you can see we're still up overall, but boy, we've given back a lot of our gains. This does not include dividends, but still, our price is barely up. Been pretty wild. VGT is all the way down to $478 per share. You can see I have 500 shares at a price paid of $246 per share. We're still way up, but again, this one's crashed by, I think, 22% or so this year. It's been pretty ugly compared to the market in SCHD, which is only down 6-point-something%. And worth a total of $239,300. We have our money market. I just paid a hefty Roth conversion tax bill, so it's all the way down to $77,858 plus this $4,350 of the high yield savings account. I always add these together. We'll see that in Seeking Alpha later. Our JEPQ, oh boy, this does not include dividends, but still, yikes. It is currently listed at $46.60. These growth ETFs, of course, JEPQ is a growth ETF. It uses the NASDAQ 100 as its underlying holding. So not counting the covered calls to create some cash flow, it is a growth ETF through and through. And I have here 1,623 shares at an average cost of almost $58 a share. Ouch. And it's currently worth $75,631. It's actually good to see the share price depreciate on this one because we're getting more shares per reinvested dollar each month. So I'm happy. And then with IBIT, we still have our 1,050 shares. They're at $36 cost each, and they're currently at about 47. So you can see I'm up a healthy 12.3K on this investment and 32%, and it's worth just a touch over 50 grand. And from this S&P 500 index fund down is my nephew's, and it will not be included in the spreadsheet or Seeking Alpha. All right, we're out here on Seeking Alpha, and this is where everything is aggregated to. You can see for E-Trade, and this is mine and my wife's. So I'm going to quickly open this, sort by value, and these are almost the same as mine. You saw earlier my wife had some. So the SCHD, we actually have 14,950 shares worth nearly $378,000. And VGT is the same. JEPQ here, we have a nice rounded 1,870 shares between us, worth a total of 87,000. And then IBIT's the same, and the money market here is just the money market plus the high yield savings in E-Trade. I just put it in one number, it's easier here. So there's E-Trade for $836,000. And then we also have my wife's 401k, which is 100% VU, the S&P 500. It's been beat up recently, obviously. She's still up by quite a bit overall. She has 816 shares worth almost $380,000. And then the HSA here is 100% VUG, which is the best investment offered there. And you can see we have about 93 shares worth 31,000. Man, that thing's really crashed, just like all the other growth funds. So we have lost a lot of value, and we're about to jump in the spreadsheet to show just how much. But believe it or not, we've actually outperformed the market. And we'll get more into that here in a bit. The HODL factory is at $17,000, so it's down quite a bit as well. And then cash equivalents is non-money market stuff. I have some high yield savings and a few other things to diversify my cash, and that's at $42,600. So the overall portfolio is sitting at just over 1.3. Oh, and before we magically snap over to the spreadsheet, I wanted to say, you probably remember recently I started the Snowball, and it was a collection of stocks meant to go for value and dividend growth and to provide competition for SCHD. I gotta say, my OCD got the best of me, and the HODL factory is already enough small holdings. I couldn't stand tracking 45 different stocks, to be honest with you. It did easily outperform VU, and it actually got to within 2.5% of SCHD, and it was down by 5%. at one time. So it was performing better than all of these actually, but I just stuck with the HODL factory. Hutch and I love running this thing over time. But anyway, let's hop over to our spreadsheet. Out here on the spreadsheet, I'm on the main portfolio tab. This is what I populate to update it, and the rest is mostly automated. But you can see I just plugged in those numbers we just saw in Seeking Alpha for each category here, and we come up with that same total. Now I hopped over to the allocations tab to see where we're at, and this has changed a lot. This is fun to see. Our number one holding is still VU, and that's the wife's 401k, and you can see it's 29. We'll get over here to categories next. We have VU, SCHD, VGT, cash, JEPQ, which adds into VGT, it's growth, and VUG is growth. And again, I always have to say this, but remember, JEPQ has the same makeup basically as QQQM, which is pure growth. Their PE ratios are nearly identical. They're actually within 0.1 of each other. So make no mistake, JEPQ is a growth ETF through and through. It just has covered calls on itself to produce premium income, but that doesn't help your quote unquote value. In other words, these are not dividend stocks. These are not value stocks. It's the same tech and NASDAQ 100 names you see with QQQM and SCHG and VGT. And then we have IBIT, which is its own category, Bitcoin. It's at 3.8%, okay. And then you have the HODL factory stocks, which I put them in their own category too. They're a similar PE ratio to the S&P 500, but I wouldn't consider them, in the S&P 500, but they definitely don't belong in these categories either. So what I do, if you're new to the channel, I try to keep the S&P 500 value and growth ETFs at about the same. And S&P 500 will run because we maxed the 401k, that's all that. So we're inevitably not going to keep up with this, but that's okay because if there's one holding that I'm okay having basically up to 100% of, it's VU. So within value and growth, I balance them out to the target allocations. And for multiple years, as many know, SCHD has underperformed the growth. I have been adding to value. But now, as you can see, we're actually light in growth, which is exciting because I'll continue to buy JEPQ, maybe even SCHG eventually, or a little more VGT. We'll see about that. But I haven't been able to buy growth in a long time, so it's pretty cool. And then the cash I like to keep at around 10%. Now, I did just pay about a $26,000 IRS bill, mostly for a Roth conversion from late last year. But the market crashed, so ironically, I'm almost back to 10%. So if the market keeps crashing, I'll target allocation cash back down to 10% if it rises above, and it'll sprinkle into these. And then Bitcoin, I've been thinking a lot about this one lately. I've always had it to where I will buy more if this gets below 3%, and I'll sell and shave profits if it gets above 5% and sprinkle it into this. I'm thinking I might buy if it gets below 2 and sell if it gets above 3. Once we have a few long-term capital gains to work off of. A lot of them are, but I want to wait a little longer. So I think I might shave a little Bitcoin moving forward. And again, that's IBIT for me. And then the HODL factory, this is YouTube money. I don't really consider it my target allocations, to be honest. I won't let it get above, 10, 15%, but I don't think you'll ever get there. I just trickle in about $100 a week. And now I hopped over to the pivot table that shows the value by month. I like this one because sometimes when things get stressful, it's good to just zoom out and chill. And you can see here in April, we're actually right about what we were in April. We're just losing actually compared to April last year. So that's okay because you got to remember, I share everything. So my cash is in here. We purchased a family vehicle for $33,000 recently and the IRS bill of $26,000 or $27,000. Inevitably, that's going to drag my bar down, but we're still keeping up pretty well. So when things seem dire, just keep zooming out, and this could keep working down, kind of like it did in 2022 here. But eventually, I promise you guys, we'll be way up here, sniffing 3 million. So just stay the course and keep cost averaging in. I love just zooming out and looking at this. And the last thing we'll touch on here, and I like to show this one, is the portfolio projections. So this takes the current value of the portfolio and our current contributions. It adds in the monthly contribution. I assume an 8% nominal return, about 5% real return if you want to count inflation, which I do separately. So I'm conservative. I assume 2% less than the historical average on the return on these things. If you normally watch, I've had the 3 and 7 years highlighted.
Because when I have 2 million, I'll get a little more conservative. When we have 3 million, we plan to full on retire. That has now been pushed out to 4 and 8 years. So that, that blip down of over 200K really cost us some time, but we'll just stay the course and keep our dollar cost averaging in. That's why I love this model to update real time based on your current value, your current contributions, and assumed growth. Because I don't like to look out 30 years and assume, I'll be here when so much can change. So the market drop just kicked us square in the nuts and we dropped a year. And I'm okay with that. If we have a big rise, it might get to here and here. Who knows?
Every dollar is stretching further as the market tumbles. Let's see where all of mine went. Portfolio contributions. We'll first cover our automated investments that happen on a regular basis. We max out my wife's 401k and HSA every year. This happens evenly throughout the year as she gets paid. And then yours truly throws my YouTube money into the HODL Factory, my individual stocks, which I have out there on M1 Finance. And then I log into E-Trade every Monday to manually reinvest my dividends or any new contributions that I have. I have dividend reinvestments turned off because I like to stick to my target allocations in all markets. I also have it turned off because I can't bear to have fractional shares in my accounts with my severe OCD. But that's a me thing, so let's just stick to the target allocation reason. Here's what I did this month.
It was a pretty quiet month for new transactions. You can see here that I have March of 25 selected. There were 5 contributions to the HODL Factory, with March being a longer month. And I actually stepped my game up and did 203 of them and then 102 of them. Got a little cocky, got riding high, YouTube channel's doing pretty good, but then it slowed down a little because someone disappeared for almost a month. So I'm back to 100, but anyway, I got a few big ones in there. So my average cost, you can kind of ignore this, but 160 per contribution. And then SCHD, I picked up the 35 shares for $9.75, which is looking a little high now, but it'll age well long term. That's $27.87 a share. This was my March JEPQ dividend. At the time, I was low in value per my target allocation, so I swooped up some SCHD. And then VIGIX and VOO are my wife's automated paycheck stuff, and the power of Snowball Analytics allows me to show that now. You can see we picked up 1.43 shares of VIGIX at an average cost of $202, and it was a total amount of just under $300. And then the S&P 500 401k contributions plus the juicy company match picked us up 5.51 shares at an average cost of $514.03, and you can see the total was $28.33. So you can see that our total contributions were $4,898. Of course, these are dividends though. So that spreadsheet of 4,200 or whatever it was ended up being about right here. It'll vary a little bit, but that's about where we want to be. And I do have some recent big reinvestments, as you may know from the SCHD dividends, but those happened in early April, so we will talk again next month.
It's time to jump over to what is by far and away the best section of this video. Dividends received. We crushed our all-time dividends received record for a single month. And a side note, I just love being a dividend investor in these red markets. We are buying at a discount as the cash continues to flow into our accounts. Oh, and this dum-dum also has some positive revisions from our first 2 months of dividends for this year. Let's talk dividends, baby.
We're out on the dividend tab within the portfolio tracker, and you can see right here that we nearly hit $7,000 of dividends for March of 2025. And that is an all-time record, which was previously December of 2024. You can see right here with $6,251 of dividends. Now, a couple revisions. I promise I'm not doing this on purpose, you guys. I just have my money spread in different places more than usual with the wife's Roth IRA and a few different cash options. I've diversified a little, but I have forgot to add some dividends at the time I recorded the video. If you watched last month, I was so sad that I didn't quite beat February of 2024. Well, adding my wife's JEPQ and one other thing, I actually did outperform it by quite a bit. And January got the same boost, again, with mostly the JEPQ from the wife's. So I have a better checklist system to get them all each month. Hopefully there's not many more mistakes, but these are accurate. And so were these. It's just I had a little more consolidation here, and I'm just getting used to the new flow. So looking at March here specifically, and I should note, we shouldn't look at 2023. I had a treasury ladder and some other things, so these won't line up apples to apples. Really, we should compare 24 and 25. And actually, there we go. I got rid of 2023 with my slicer here to make it easier. So in March of 2024, we had $4,535 of dividends compared to the nearly 7K. You can see JEPQ, we built our position a little there. The M1 mix, the HODL factory, has almost tripled, but a lot of that's contributions, of course. SCHD had a 22% boom compared to last year, plus we've added shares, so you can see we're way above last year. VGT is lower. It did decrease its dividend a little compared to the really big one in Q1, but a lot of that is the share shaving that I did to ultimately get some JEPQ. So this isn't apples to apples, but I think it actually did decrease quite a bit. VIGIX, not a big dividend payer, and this is actually VUG out there in Seeking Alpha. This is the one we actually hold as the same thing within the HSA. But you can see we did 46 compared to 36. Not bad. The money market we were pretty heavy on last year, and I've diversified a little more of that into things like JEPQ. But anyway, 295 this year compared to 491 last year. And then the S&P 500. Okay, let's go. The high yield savings account, this is sort of just other. That's new, 176. But I bet you. Okay, so this actually didn't pay till April last year, the S&P 500. So this isn't quite apples to apples, but this year it gave us a nice 1474, which was more than it paid last year. You can see it 1,071. So we had to sort of stretch into another month. It's not perfect, but at the end of the day, all timing aside, we kicked butt compared to last March and had our best ever. I'm really happy about that.
On to our outperformance that rewarded us with a 6-figure loss. Portfolio performance. I'm loving Snowball Analytics as I discover more and more little nuggets. It, along with Seeking Alpha, are the two services I would use with or without a YouTube channel and affiliate links. Anyway, back to my tumbling portfolio.
We're out here on Snowball Analytics, and I'm starting on the Analytics tab here on Common. So what I have selected here is everything, and I've consolidated this list a little to make it easier. This is everything including the money market. Then we have stocks and ETFs, so invested money only, so we can truly compare it to things like VU. And then we have ETFs only and stocks only, so this is the HODL factory, and then this is the 6 ETFs I own, and cash broken individually. So stocks and ETFs is these two, and everything is, well, everything. So I think I had funky names before, but I tried to streamline it a little. So you can see here's our number out here, same as the other one, so everything's looking good here. Our internal rate of return is all the way down to 9.5%. This is wild. It's been, 16, 17% for years, but it's really taken a drop. Our yield is almost up to 3 though. That's interesting, with a 6.6% dividend growth rate. And now I'm out on the growth tab here to compare us to the market. This is what I find is pretty cool. Right now, if I include everything, it's kind of cheating because our cash has done well, but really I just want to compare our invested money, stocks and ETFs, which is 90% of our stuff, to VU for a fair comparison. And so you can see I have March selected here. I'm sorry, I have through April 5th. Oh, I wanted to include that bad day just out of curiosity. But actually, you know what? Let's just include the 2 bad days. So you can see our portfolio has outperformed VU by about 10,000 or 0.84% during this horrible time. You can see it's way down. Oh, and right here, we've lost 194.6K. But if we would have been all VU, we would have lost over 200K. So the portfolio is working pretty well. And we can really test ourselves here. Portfolio performance. I got to hit compare. So year to date, we are very close. We're just ahead of the market. We've lost $186,000. Again, this is only our invested stuff. It doesn't count my IRS bill and car bill, which makes it fair. It's apples to apples. And this is interesting because VU looks like the dollar amount's down less, but yet the percentage is down more. Must just be the timing and the extremity of the gains. That's pretty weird. The bottom line is we're about on par with the market this year. And I stuck in March just because we are on the March review, and we did outperform the market by a pretty comfortable amount, almost 1%. And the cool part is we can see that down here. So if we hit compare, this will show us each month. Started out, the market beat us. The next month, we were basically tied. The market barely beat us. And then we kicked its butt pretty good in March by almost a full percentage point. point. And then this month, it looks like it's pretty close again so far. Looking at March, we did get a win this month, and I'm pretty happy. I mean, let's be honest, no one's happy with the market, but at least we're slightly outperforming it. Okay, and just to clean up this data, I went down to holdings performance and I did change it to ETFs only. We'll do the HODL factory here in a minute because there was just a lot on the screen. But you can see that SCHD, and I'm here in March, I should say, SCHD dominated the market, and IBIT and JEPQ also pretty handily beat the market, with IBIT being down 2.3% and JEPQ down 3.1%. And then VU, the market was down 5.6%. And the reason we barely beat it overall is because VIGIX, and especially because of our volume, VGT, were down a whopping 7.4% and 9.3% respectively. Ouch. Okay, now I'm out on the metrics tab and I put it back to stocks and ETFs. So this is all of our invested money, and you'll see why I do that. It kind of makes sense here. But you can see that my PE is 22.3, which isn't bad. I think VU's maybe about the same right now, maybe a little higher. Okay, I couldn't help myself. I had to Google it real quick. 22.45. Okay, yeah, so right there, like we're slightly lower than the market, which is good. And then we have our beta here. We're actually at 0.866, so below 1 is less volatile than the market. So that's good. That's why it's green. It's good to be below the market. But then on the Sharpe ratio, we actually have a higher risk-adjusted return of 1.231 to the market's like right around 1. So this tells us with less volatility, we get what should be more alpha over time. Okay, and of course, I gotta show the HODL factory update. So you can see I just have the M1 stock selected up here. And on the portfolio value, it looks like our portfolio outperformed VU by $431 in March. So that's pretty good. Okay, now I'm down on portfolio performance so we can see some details. But you can see we lost $700. The market would have lost $11.59. Pretty big outperformance, down 3.58% to the market's 5.77. I'm really happy with that. And taking a quick look at the year and, focusing on March, of course, we started with a big win in January, and then we had a pretty big loss here, negative 3.3% to the market's 1.28 in February. But March, the month we're looking at, as I just showed above, a very big win of over 2%. That's a nice one. And then I'm down on holdings performance. I might have to scroll here to get you on the screen. I have March selected. You can see there. I won't click anything else, I promise. There we go. We can see them all. So you can see that TPL, our biggest holding, had a big L at minus 7.1%. And then Visa was pretty solid, negative 3.2. Now Hess Energy, Devon Energy, EOG Energy. Where's my other one? I am missing it. Oh, it's right here. And SM. These are all energy. So you can see the energy sector did really well, but this is March and we all know what happened in early April. So it'll be interesting to see how that plays out. I know these are the culprits so far in April. SCHD went energy heavy and it got hit pretty hard too in those couple days. That'll be fun to see play out. CSL is actually positive. It looks like materials and like building, interesting. Where's Microsoft? Microsoft is down 4.8%. So this is just a map, it's by size, but they're all relatively the same. We keep them. We buy the comparative dip and we have them all set at a default 4%. So, TPL is quite a bit more than 4% because it's ran up so much overall. Actually, let's just take a quick look at that. Let's do something like year to date and bars. Oh my gosh. Yuck. Okay, and this is confirming what I just said. Like here's SM Energy down 39%. And then we have Devon, EOG down a solid amount as well. Hess is positive. That's interesting. You can see Visa's had a good year relative to everything else. And we're all just beat up anywhere from 6 to 39%. Yikes. That is crazy. You know what? When in doubt, zoom out. Let's give TPL some love, man. They've made us some moolah. I mean, come on. It's overall is a 91% gain. So I just had to give it its kudos. It's just all, we started this thing in April of 23. Hey, we're coming up on 2 years.
I have a great feeling about the future for our portfolios. Looking ahead. I do have a few things that I've been cooking up ideas for my portfolio and potential changes, but I'm gonna hold on to those for this month because I'm not 100% sure I'll be implementing them. Let me just keep it simple this month. The market has been falling. Now, I'm not sure what happened in the week since I recorded this one, but the last 2 days of the market on Thursday and Friday were terrible. And maybe it's gotten even worse by now. Whatever has happened, just do yourself a favor and do not panic sell. Never give in to that fear and keep accumulating those shares in every market. And check out one of these 2 videos if you want to continue down your path towards financial freedom. Remember, money is overrated. Freedom is not. Thanks for watching, and I will see you here in the next one. Bye.